go over your trade today?
Yeah, I'll show you one, but I won't show you all the other because I did something different that I don't want y'all to do.
Are you talking about the gold?
Yeah.
Okay, okay, got it, got it.
Uh, Let me find. Okay.
And
So
please explain that break even trade. Like when did you get out and why did you get out? Like on what candle did you get out and why did you get out?
I didn't get out. I just let it hit when I shouldn't have done
Oh,
that.
okay. Yeah, trade to break even. Okay, well,
Mhm.
can you explain when did you go to break even and why did you go to break even?
Yeah. So daily, we had we've made a higher high, expecting price to continue lower. Don't know what demand zone's going to hit, but if it's going to hit something, this is the first thing I would like to see that it hits. It's the only thing that looks like a quality demand zone, anyways. So that's why I'm looking towards it, going towards. Come on the 1 hour order flow on 1 hour is shifted right here. So no longer do I have order flow going directionally where I want it to go. So now I know that if we take out this low, that would be great, but I'm not sure if we're going to take out this low. So all I know is that on M15, whatever I see order flow wise, it's just a leg coming into possibly some demand zone on the 1 hour. So right now, M15 H1 ain't the same, and both of these are my trading time frames. So I'm just kind of cognizant of what's going on. So we end up having a valid POI that happens here. And so because of that, I go down to, let me do this actually. So we have a valid POI here. Um, there's a zone that I'm watching that's in pink. I don't want to take trades until it had finished creating. It did. That was the spot where I started looking for trades. One second. 8:30, 45. Okay. So that's the part I started looking for trades. Now, I'm not going to explain exactly this first one to y'all because I did something I did differently uh, that I'm still testing. But on this one, we ended up having the right break of structure that I was looking for right here. So I took this trade. Now, I told you we're inside the pink zone. This is the very first time since this pink line that we test this pink zone. I know that price is going to do, when it comes to this pink zone, it's going to go something like this and then try to go back down, especially because the supply is done. So because of that, I see push, push, push. It doesn't break. At this point, I decide to move my stop loss to break even. Oh, I don't have it on this one. It's on this one. And so knowing that we're in that pink zone that I identified, there we go, stop loss to break even. Okay. So knowing that we're in the pink zone identified, I knew there was highly likely it was going to get knocked out. I got knocked out. I waited for us to come back in. We had another opportunity right here. And that's the trade that I took with the expectation that the pink zone's got to go. It does, and I hold my trade. It breaks through, it comes back. There was another entry right here. I just was not paying attention, did not take it. So I could have taken another trade from here. That one would have also gone 3 to 4R. And so I had this one holding. This one almost came to take me out, but it didn't because I was expecting the pushback. So I didn't move my stop loss on this one. And it continued on to eventually hit 5R on both. So I ended up collecting 10R on the day and a break even in between.
That's good. What was your stop loss on both of them? Couldn't see it.
Um, this one was 1.08. That one was 0.891, 0.89, and this one was 1.00.
Is that 10 pips on gold?
I don't count pips, bro. I can't even count pips.
Wait. So what do you do? Stop loss. Like, what do you do?
Count the points. Pips are irrelevant. It's just a form of measurement. I'm not a pip counter. I couldn't tell you what this was in pips. I don't even try. Because depending on who it is and how you look at it, everybody has a different, like people count. I've seen people count pips on NASDAQ 3 different ways. Nobody counts it the same. But if you always look at the measurement of points, it's always the same, right? So if gold is right here at 1744.80, on this broker, it has 3.3 decimal points. On your broker, more likely it has 2. So if it's all of that, all I do is I know, okay, my spread is 0.25. I add 0.80 to any trade that I trade. So that end up making this one end up being from 88 to, well, this one, it was already 0.2. So I had 0.8. That ended up being a whole 1.0. So some people may consider that 100 pips. Some people may consider that 10 pips. I don't really know. Never tried. Like, you don't need to know pips to know how to add a stop loss. You just need to know what your spread is.
But may I say something about that, bro?
Mm-hmm.
I mean, like, for Perry, like, stop loss, like counting the pips, like this doesn't really matter. Like, you just have to do it in a systematic way. Like, for me and my plan, I always put my stop loss where I see on the left a wick, or either it's going to be like on top at the edge of my chalk, so then I would put it there. But if it's down the chalk, then I look on the left and I see a wick or some kind of like POI, let's say, whatever, because I know that from backtesting 500 to 2,000 to like 1,000 trades, that it saved me so many times to just put it there, right? When putting it like just right at the wick of the last candle, that like, let's say the confirmation candle, I would get stop loss more. So I'm just a bit more conservative, but then it's my plan to take it pretty much at the same spot, but it's never the same size. It's just a systemized way to put my stop loss, but never a fixed number, if that makes sense.
Yeah.
The fixed numbers don't matter.
Fixed numbers don't matter, man. You're trying to tell the market how big your stop loss is. It'll go take you out. Like,
yeah.
Neither Luca or myself use fixed numbers. I always add to the end of my trade. So wherever I find my setup, I look at the end of that. I look at the end of my setup and I add something to it. And it's the same. It's the same number I add to it every time, but my stop loss is always different. Your stop loss should be a dynamic thing. It should never be,
Exactly.
It shouldn't be something that where it's
it
where it's a fixed number.
No.
Got it. Thank you. And also, what is that pink zone?
It's a magic zone.
CPB.
We talked about this a couple weeks back. That's what Nathan refers to CPB. I refer to as PRZ.
Okay, and I'm seeing, and then your supply zone. I'm not seeing how you drew it. Is it just the wick, or is that the wick you just drew it on?
No, I drew it on the candle.
Yeah, but maybe you have to like explain him the base rally thing theory. Maybe that's why he's confused.
This is what I was talking about when I was sending your pitch, when we were talking back and forth, period, about the details that you have to pay attention to. Candle pulled back and broke right here. That's the supply zone. You probably can't see it because you have to look very closely. The market made a move down, pulled back up, and then broke with imbalance. That's the supply zone.
So I'm thinking the supply zone will at least. I think in your supply zone you would add um uh a bullish candle in there. I think I thought that's where it would start from.
That is not in any part of the rules that I sent you. That's not in any part of the rules, brother. All it needs is a pullback. And that's all. That's what happened. It pulls back with a wick. It breaks with right here with a candlestick body. That is a supply zone. It may not look like much on this time frame, which is the 15-minute, but I guarantee you, let's look at it on 10-minute. Look at what happened on the 10-minute. You got the same thing. It pulls down, it pulls back. You have a bullish candle, and then it breaks. So this is the one area where I tend to look at. I look for pullbacks, and it can be it's the most subtle thing that you have to pay attention to, because the true definition of a supply or demand zone is that price goes from a low point, makes a high point, and it breaks that low. And once it breaks that low, technically everything that happened after that break is considered a supply or demand zone. So all of this would have been the supply. What candles do is not really relevant. Like, you have to really go back to understand what is the theory of a supply or demand zone.
I don't know why that up candle before the down move, but I thought it had to actually show the candle, so.
That's what some people believe to be what supply and demand is. You look for the last up candle before a down move. That's one way of doing supply and demand. That's not the only way, though. That's not what I follow. We'll put it like that. There's pivot-based supply and demand. There's single candle-based supply and demand, which is what you're referring to. There's range-based supply and demand. There is one other that I can't think of. Dang it, I need to access Notion real quick. Yeah, there's like 4 different ways you can do supply or demand zones. If you do single candle, you would have never seen this supply zone. Where's I can never remember that 4th one. Range, pivot. What am I missing? Oh, fractal. Duh, it's the wicks. There's wick-based supply and demand reversals. I don't do those, though. So that's why I never remember. But yeah, there's 4 different ways you can do supply and demand.
So which one do you really do mainly?
Pivot. Pivot's a catch-all. So I do pivot. Single candle, you'll miss a lot of trades. But that's predominantly the only way that you get taught online, or most people's courses or stuff that you find is going to be mostly everybody regurgitating that single candle is the way to go. But that it never moved the needle for me, because I would miss so many trades because I have to have this super accurate entry, and it would never work out.
But that will only work if you have the whole strategy, because obviously if you go on taking old chunks in that huge supplier demand, let's say, you'll get many losses. So don't go on just like now pulling these ones and go on taking old chunks, right? So I mean, it has to really be like mastered to the point to where Brian is and where I'm now, because we know what chalk, we know where to break even, we know where to close. Like, we barely take any losses, because we know every single thing of the whole thing. But if you just pull like a supply demand, and sometimes they're huge, and you'd have like 5 chalks run after the other, and maybe it's the last one, that works. Then you would take 4 losses, and you'd be fucked.
What do you mean 5 shots? I don't understand.
When you have these wide zones, sometimes your zones will be this big. And imagine trying to buy every time. Like, say for instance, you tried to buy here, 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 and then maybe here. Well, that last one probably might be been the one to go, right? So if you do that, and say for instance you have these tight stops like this, you're going to take a lot of hits. It's going to take like 5 hits before it actually goes. And this might be the one that actually ends up going somewhere and it being a trade. But because you pulled such a big zone, you took all 5 of these hits to get it to work. Whereas most people are being taught single candle. So if you do single candle, you would avoid this loss. You would avoid this loss. You might have taken that trade and that trade. We're going to give you the benefit down and say you avoid this loss. You'll probably take this loss and then maybe take this trade. So, I mean, there are benefits to it. There are things, there's catches to it all. Like you can't look at any one feature of what you're being taught in totality. You have to kind of look at the whole system as a whole. How does it all work together is the bigger question.
Yeah, you can't just like pick one concept after the other of like from Brian and then just like, oh, okay, now I can add this, but then like it's so complex, this whole system, also easy but so complex and so well thought and based on so much data that there's so much to it, more than just that one thing. Oh, now I know direction, cool, I'm gonna kill it. No, because there is this. Oh, now I know supply and demand. Yeah, but you're missing this. And so there's so much to it that you have to know this whole thing linked together to make it work. And it takes like so much work, so you really need this whole system nailed, like, and know it by heart to make it work. Like, it will just not work if you just take one concept and try to make it your own and be confident it's going to work. Like, you know what I mean? It's more complex than that.
Totally understood. Thank both of you guys. Hey, Brian, can we go over Nas today?
Sure. Oh, not that quick. Dang it. Oh well. Let me hide all this real quick, guys. Hold on 1 second.
Luca about to get that 20 million account.
Yeah, man. It's a bit slow though. The market is a bit slow, but do not worry. Do not worry. This shit's gonna get done.
Yes, indeed. Yes, indeed. Yeah, the market statistically this has always been a slow week anyways. Okay, let's make it happen. All right, we're in there.
My time, please. New York as well. Thank you.
Okay. So structurally, price is in the consolidation. It's made a lower high, higher high, lower low, higher high. So what that means is we don't know. We don't know what it's going to do. But the least part, the most logical thing we can say is that somewhere in here it's going to stop, maybe at this demand zone. Who knows? So probably think it's going to go be for sales. If you take a look, today's price action was very interesting. So Perry, this is 4 a.m. your time. Let me change my time to your time. Ooh, give me 1 second, guys. Just knows what time it is. All right. So we have really, it's a mess of a market, honestly. You look left and there's nothing really all that convincing unless you wanted to take this supply and try, which I wouldn't have done. You have demand breaking here, and then it gets broken. You have this is an example of a supply, range-based supply. So then you have a supply here that ends up getting broken. Then you have new demand being created and price continues to take off. I don't know why they're so happy. So, yeah, I don't know where you would kind of trade today, to be honest.
So I had a supply zone to the left.
Where at? Something from over here?
I'm on my phone, so I'm going back and forth. So it's that big one to the left, and then to the right of that, where it's like a bear tweezer top.
Right here?
To the right of that one. To the right of that one.
This one?
Yes, that one. That one right there.
This zone's been tried so many times. I'm not seeing where you got a zone here. So I guess if you pull this as a single candle, it's already been tried so many times, it's more than likely going to fail, which is exactly what it did. So say, for instance, you pull a single candle. It came in, got touched, pulls back, comes back in, tries to leave, but it fails. It leaves, comes down to make this new low. This supply gets broken. It comes back and gets touched. By now, you've already had one touch, two touches. This is a third touch. If it didn't go before you woke up and it comes back and touches a fourth time, it's likely going to fail. Now, it ended up going higher, right? And leaving, but then what happened? It came back and broke through anyways. So you have to be mindful that supply and demand is supposed to go like this. Your goal is for it to not be touched more than one time. If it happens to be touched more than one time, you want it to take out at least highs and then keep on going upward. But the moment it starts touching 2 or 3 times, you can think that that last time it's probably going to go. Does that make sense?
Got it. So what about the supply to the left of that one? It's like a little bit taller one.
I wouldn't have considered any of them because all price has been doing all day has been moving sideways. You get the only reason why you have this move is because it's the market open. So that's a fake move, which is exactly what happens. It drops down low for 15 minutes, and then within the next 15 minutes, it comes back into your supply, and then it takes it out. Hardly a move that you should be involved in. Make sense?
Yeah, I got it. Thanks.
You got to know that about the indices. The indices always have market open at the same time every day. So. But all right, guys, hate to run, but I got to hop onto another phone call. So don't forget, guys, it's the holidays. We will not be having a call on Thursday. We want this a U.S. holiday to enjoy the turkeys. So I will be eating on Thursday. I will not be on this phone call. So I hope that y'all have a great rest of your trading week. We will get back in the saddle swing of things phone call wise next Tuesday. But in the meantime, guys, wish y'all best in trading. Please be safe. This is going to be a short week. There's not much market volatility. There's weird moves like this happening where the market wants to move sideways. And tomorrow we'll have some fundamental impacts that I'm sending a write-up for now. So that, guys, I'll leave y'all adieu. We'll see you in Discord. If I didn't get to answer questions that you had today, please go in Discord and ask them, and we'll be able to chat there. So talk to y'all guys soon.